Hello everyone, welcome to another video of my channel where you can expect to learn something new about the field of finance with every video that I post. Well, you would have heard this quote many a times that a good time to invest in a company is when it is least popular. That is when everybody is selling, you should buy. So in today's video, we are going to test this quote and try to first identify a sector which is least popular right now and then try to shortlist a couple of companies within that sector so that we are able to make a good investment decision going ahead. And all these things will be done in today's video, so stick around till the end. And if you're new to this channel, don't forget to like, share and subscribe to our channel. So again, the first and foremost thing that we need to do is shortlist companies or industry which is least popular right now. That is, for some reason people are not willing to invest in companies within that sector and are continuously going on selling the shares. So the one thing that is very easy to identify is if people are continuously selling the shares, then the share price of the companies within that industry is going to come down. So to track that, I have prepared a sheet which I'm sharing with you right now um, in Excel using Office 365. This was created in May 2023. So what I've tried to do over here is around 1,500 odd companies I have categorized into various industries and uh, calculated a weighted average price movement either on equal weighted basis or market cap basis and see how the price of particular index has moved. So roughly I have around 182 index that I have computed. For example, in agricultural products, you can see the index of agriculture, automobile, tractors, fertilizers, other agricultural products, pesticides, agronomics. So these are all this in this column. I have tracked the index movement from 2022 till 17 May 2023 when I was making my investment decision. For example, in agriculture, if you would have invested 100 rupees on in 2022 start of 2022, then you would have had 86 rupees right now on 17 May 2023. So this is just a weighted average index that I have computed based on the 1500 companies that are there in the adjacent columns for each sector. So what we want to identify is the least popular industry. So which would be a least popular industry would be where the share price has declined significantly. Just to give you a perspective, here you can see aerospace and defense sector has, if you would have invested 100 rupees in aerospace and defense sector, then you would have got 206 rupees. So this is the most popular industry because of the war situation, obviously. And if I have to identify least popular, then this would not be a auto clutches would not be a good thing because the sample size is very less in that. Again, beverages have increased because after COVID, the demand for beverages has increased. If I go down, I have done a color coding, which I usually do to identify infrastructure, leather, paperwood, plastic goods, railway wagons. This sector has performed tremendously from 2022, giving me handsome return. So one of the least popular industry that I can select is textile because I could feel comfortable in trying to analyze what was wrong in this sector rather than analyzing something like infrastructure companies or equipment companies. So if you see the textile spinning and textile industry, then if you would have invested 100 rupees back in 2022 start of 2022, then you would have had only 70 rupees or 65 rupees based on which sector you were investing. So this is how I identified the least popular industry, that is textile spinning and textiles. What you can you need not prepare this kind of Excel sheet. It requires around one to 1.5 month of preparation. But what you can do is you can track index that are there or indices that are there listed on National Stock Exchange, and you can track their movement and accordingly shortlist the companies or sector which is least popular. So this was our first step. So now that we have identified an unpopular industry, then we need to identify the reason also. If we don't know the reason for it being unpopular that people are selling, then we will not understand the reason for its revival. So I've done some research, and this is what I found, that uh, due to decline in the demand for the Indian textile industry, there have been various reports on job losses and factory closure across the country. Although Government of India has announced several measures to help the industry, including reduction in GST rates and increase in export incentives, despite these measures, the industry is still struggling. So, what exactly went wrong? What went wrong was it is facing tough times as consumers in United States and Europe and other regions, such regions, have cut down their spendings because of increase in inflation. जैसे जैसे इन्फ्लेशन बढ़ता है, लोग स्पेंड करना कम कर देते हैं ऑन luxury items or discretionary items. So that is why the demand has gone down in USA and Europe. Again, Europe is on the brink of getting into recession. US is struggling from high inflation. So all these factors have contributed in decline in demand for from these markets. And if you talk about domestically, the shortage of raw material, environmental problems, infrastructure bottlenecks, and labor shortages due to mass migration are some other challenges that the industry is facing. Again, when we talk about the profitability of these companies, also this was all about sales. That is the demand. Then, if you talk about the profitability, manufacturers say that high domestic cotton prices, which is the raw material, and other costs have hit their profit margins. So, demand has also gone down, and margins have also gone down over the past 1 year. Or this was the outlook. What I have found was that is why the uh, textile as a sector has gone down. That is, people have sold their stocks in the textile sector. Have a look at this table. This is just a snapshot of what I have shared with you in Excel. You can clearly see that textile spinning has gone down by 29% to now 71. And textile, if you would have invested 100 rupees on 5th Jan 2022, you would have had only 65 rupees. So this is what I'm talking about, an entire sector. This is not about just a company share price, which can go up and down. But if the entire sector has gone down, then there has to be some reason for this. So the textile index and textile spinning companies shares are down 30% and 35% from start of 2022, whereas Nifty in the same time has increased by 12% over the year. So you can understand the gravity of the situation. Now that we have understood the reason for these stocks or the industry to be unpopular, we need to understand if the story or the narrative is changing going ahead. If there is a revival in the story, then only it makes sense for you to invest in such companies. Otherwise, it is better to stay away from these companies because uh, the stocks could go further down. Don't make your decision on this thing on the thought process that इतना नीचे तो चला गया, इससे नीचे क्या जाएगा, इससे नीचे जीरो तक भी जाता है, but obviously hypothetically I am speaking, but you need to understand if the narrative or the story is changing, then only it makes sense for us to invest, because people are not fooled to just sell the stocks in an industry from past 1.5 years. Now we need to identify the reason if to, and we need to check whether the narrative is changing. For that, what I have done is uh, I have gone through the quarterly conference call of Nitin Spinners of Q4 2023, and I have found some key observation because of which I can strongly state that going ahead in 1 or 2 years, the industry is expected to revive and see a strong growth. So what we are going to now see is conference call snapshots of Nitin Spinners, which is a key player in the textile industry. everything, all this data is available on the company website, or on, if you just do a Google search, then you'll find the company uh, documentation. Nothing, you don't need access to Bloomberg, Reuters. Whatever I am doing, there is no access to Bloomberg, Reuters. These are all investment decisions that we can do at our end. So no database is also required. So what are the key observations by Nitin Spinners? So if Nitin Spinners is finding these observations for the industry, or for their own, from their own perspective, then obviously within this industry, other key players are also going to find these observations going ahead, because all these players are not working in isolation. They have a common market. So what Nitin Spinners has sent in the Q4 2023 conference call is that cotton prices has stabilized. I've highlighted the key pointers. So what they have mentioned is the scenario is gradually changing as domestic cotton prices have declined from their peak, and the gap between domestic and international prices have also reduced, which is adding better competitive position for Indian cotton yarn exporters. So the cotton prices, which is a raw material for the industry, has declined and has stabilized. Another thing that they have mentioned is export demand from Europe has increased. So overall, the industry utilization is near normal as inventory with the downstream industry and global retailers is declining, aiding in new order flow for the industry. An important point being, export demand for cotton yarn has picked up from Europe, China, and Latin America. So this was about the Europe. The observation is that demand from Europe is increasing. Then again, another observation was capacity utilization has increased for the companies on quarterly basis. So this we have tracked on quarterly basis, and the spread has increased. The company, this is what they have mentioned, the company expects FY24 to be better than FY23. That is, Nitin Spinners has already published their Q4 23 results. So this was the first of the companies, which earlier companies which reported their Q4 numbers. So based on these observations, other companies' share price is going to change, because similar kind of outcome can be expected. So what they have mentioned is company expects FY24 to be better than FY23 owing to improved demand and higher focus on value-added products. Cotton yarn spread has also increased, and what they have mentioned importantly is company expects margin to improve from current level as cotton prices have stabilized. That is, they are expecting improvement in margin, and logistics cost has also declined from its peak. So this is another positive for the margin. So demand is coming back and profitability is also expected to improve. Then obviously it is a good situation for the industry as a whole. Then another important thing that will trigger the demand in upcoming years, 1 or 2 years, is there are various issues with other countries that are exporting the textile or the yarn to the developed countries like US and Europe. There are various fundamental issues with major countries. So China is the major exporter of yarn at low price, but US's strategy of China plus one is causing US to shift from China to other countries like India. So the US has put in place one strategy wherein it wants to reduce its reliance on the Chinese exporters. So this will directly benefit Indian players, while other main exporting countries like Bangladesh, Pakistan are suffering from high inflation, while Turkey is another key player, is still recovering from the earthquake situation. They have clearly mentioned this, that demand is also picking up. A lot of shift is happening from due to China plus one from various other and problems with neighboring countries. So this is what I have done the research, and to summarize the observation, overall the outlook is improving for the industry if you are able to find financially good players who are still undervalued. Because remember the thing that people have been selling shares in the industry, and they are not going to easily come back to this industry. So if you are able to find financially good players who are still undervalued, you can gain a lot from the industry turnaround. So based on this, I have taken two stock picks that I believe has 50 or 70% upside in the next 2 years. for my own investment purpose. You can do your own research. If you agree with the research, you can comment in the comment section. For example, if you are having a look at this video, let's say after 2 years, you can comment if the situation has turned around like what we expected in this video, and has there been an upside of 50 to 70%. If the share price has risen, then good chance that the story has developed as we are now discussing. And if they don't see a turnaround in share price, then the story has not developed as what we are expecting. So this is how you make an investment decision. So the most important thing to understand is the reason for turnaround, and if there is no reason for turnaround, then stay away from the falling industry. Let it be unpopular. There is no reason for you to invest just because the sector is unpopular. Okay. Now let me quickly tell you how I have come down to Kitex Garment and DCM Novel as the two companies to invest in the textile industry. Now the methodology is very similar to how we have shortlisted Atul Auto, which has risen more than 100% in past 1 year. I'm not saying that the sheet or the methodology is foolproof, because if you see other companies like um, Apex Frozen that we had analyzed, there is no movement in the stock price because obviously the story did not develop in the manner that we expected. So now that we are expecting the turnaround to happen in the textile industry, I'll tell you why and how I have shortlisted Kitex Garment and DCM Novel to be the two players where you can invest and expect a 50 or 70% return in 1 or 2 years. So what I usually do is do a comparative analysis of stocks in this sector based on various parameters, like I usually do for all the peer companies, using my automated sheet. And I have identified these two companies where there is a possibility of high return. I'll not get into too much detail because again the video will become too large for anyone's viewing. So this is how the peer analysis sheet looks in my Excel. So what I do is I compare the parameters, sales parameters, EBIT, ROCE, 3 year sales growth, what is the EBIT margin, 3 years average EBIT margin, what is the current margin, net profit margin, return on equity, gearing parameters, how much is debt, and valuation, whether it is undervalued or not. I compare them on a color coding basis with, let's say, 7 odd peer companies that I have shortlisted within that sector. If you just do a rough analysis, you will shortlist at least 10 companies based on the financial health. And based on these comparative analysis, I have shortlisted Kitex Garment and DCM Novel. Not get into too much detail, but these are fairly priced, fairly undervalued companies, and although their sales growth, EBIT margin are not highest, but they are moderate enough for us to invest because they have a fair enough financial performance over the past 5 years and are still undervalued. Additionally, apart from the comparative analysis, I have done some important analysis, key highlights to which I am going to share with you on why I have chosen Kitex Garment and DCM Novel for investment versus the other players. So have a look at this table. On the left hand side is the parameter. On the right hand side, the data for DCM Novel and Kitex Garments. So I've compared it with other peer companies. I've removed other peer companies, but I'm going to show you. So index price from 2022 to May 23 when I was doing my investment decision. So it was down to 48% for DCM Novel. That is, had you invested 100 rupees in 2022, then you would have had only 48 rupees in May 2023. So there is a huge decline. So that means there is a huge upside potential also. Similarly, Kitex Garment was 71. So these are fairly in need of correction. That is, correction upside is possibly higher, because also not just the share price but PE multiple is also important thing to understand. For DCM Novel, this is when Q3 23 numbers were out for both the companies. Q4 were yet to be out in May 2023. So DCM Noble had a PE of 10, which is very undervalued. Similarly, Kitex Garment had a PE multiple of 11x, so which is also very less. Another important parameter that I analyze usually is for other peer companies, that is debt to equity. That is if debt to equity is less than 1. So it was fairly very low. So there is no debt for both the company, not for DCM Noble, neither for Kitex Garment. And another important thing is exposure to US and Europe market, because US and European markets are going to revive, right? The demand. So for DCM Novel it is 33% and Kitex it is 80% as compared to the other peers that I have removed. So that is why the main focus was on DCM Novel and Kitex Garments to have a revival in the share price. Capacity, if you see, then there was not much explanation about DCM Novel. But in Kitex Garment, they mentioned that they are expanding their capacity by more than four folds in coming 2 to 3 years. So sales capacity utilization, number of orders is going to increase for Kitex Garment. So it's a long term perspective for Kitex Garment. Buying price of the share for DCM Novel was 147 and Kitex Garment is 155. Current share price, as I am recording this video, is 160. So 9% is already up for DCM Novel, and for Kitex it is 165. So 6% is already up. Now, important thing to understand is whenever you do an investment decision, try to highlight your rationale for investment. Okay, my simple rationale for DCM Novel is hold it for 1 year due to low P price and PE multiple. Recovery should start from Q4 23. Okay, so DCM Novel is just based on 1 year horizon because it has a very low PE multiple and the share price is very undervalued. Okay, rationale for investing in Kitex Garment, which is going to expand its capacity going ahead, is long term because of the capacity expansion and US exposure. And as and when its US exposure to revenue is 80%, so as and when the US economy gradually revives in 1 or 2 years, it recovers from the high inflationary situation right now, then Kitex Garment is going to see a tremendous upside in the share price. So it is important to define the rationale and the horizon for your investment. This is why I have shortlisted DCM Novel and Kitex Garment. Hopefully, when you are looking at the share price, when you are watching this video, try to compare it with the share price, what buying price of 147 and 155 for DCM Novel and Kitex Garment. Then you can make up a decision whether the share price are actually reviving or not. Hopefully you guys found this video helpful to identify or how you can make an investment decision, to identify unpopular stocks or unpopular sector, and you can make an investment decision in those unpopular stocks as well, so that you can make some profit out of it. A lot of research work goes into making this video. I am not usually too much into making videos on weekly or monthly basis. I usually make videos as and when I am able to take out some time for this. I'm a working equity research analyst and I have a lot of work to do. But I would like you guys to connect. Hopefully, you guys like, share, and subscribe to our channel. Let's try to connect. Following are my details, and I take various value-added programs as well. The link to which would be provided in the description.